Hi everyone, welcome to our market talk. Hi Raphael. So wow, actually it's very hard to be a bear. So I hope our viewers and users are still bullish. At least I am. So yeah, so let's hop on. And Raphael, are you still bullish? What you see in the market?
Yes, I was just checking if the stream was working. Sorry about that. Yeah, I'm still bullish as hell. So the title of this video is to I think you say title in English, the bears, because for I think for a full week it was like bear port on Twitter. Today I opened Twitter and my whole feed was just people finding 10,000 ways to say that the market was going to crash. And well, I mean, we are still there. And NQ is up 1% as we are speaking. So now I'm going to go over the setup I always go over. Give me a sec. I'm going to share. This is the one. Okay. Vai, do you see what I'm sharing?
Okay. Yes.
Okay. I just want to make sure it will not bother my screen. Okay. Okay, good. Okay, so we are looking at NQ. So I took a long NQ trade on the retest of trade. I will show you on the 1 hour what it looks like. So daily, my daily trade. I'm going to hide this one. So it happened. It was, I think it was, yeah, Monday the 24th. So we had a retest of trade, and what was happening at the same time was that I had overbought on daily that was gone. So I'm going to show you on daily. I had overbought that was gone here to confirm that the buy on the trade was a good idea. We also had a retest of the low of the range, which was also very good. And yeah, so we had a retest of low of the range. We had then the overbought that was gone on the daily. And one thing that I was worried about was the fact that we had a cap to the upside, and the cap is now gone. I think it went away end of last week. And since then, what we are seeing is actually a very good improvement in the upside downside ratio of, so I'm talking about NQ, but you can imagine a QQQ, NDQ, I mean, all the tickers you can find, that could be considered as a proxies for NQ. The same thing happened on those two I just mentioned. So you could have checked those. So as far as I'm concerned, the retest we had on the 24th was the short-term bottom before the next leg up. And another thing that you could have noticed also today, if you looked at QQQ at the open, was the fact that the upside downside ratio was below 1. I think it was 0.84. And even after today, with a plus 1% move, I just RT'd before the show, and now we have an upside downside ratio above 1. This is actually very, very bullish. First exponent on the 3 months is still very high, meaning continuation of trend is very likely. And as far as I can see, we are still in bullish trend. So from my side of the pond, I'm very surprised by the fact that there are so many bears currently very confident about calling for a crash. I mean, the overbought is gone again. The trade on daily held, low of the range held. We didn't even have the, when you have the usual multi-day correction, we have the sell-off and the range expand to the downside. We didn't even have this. And now we have cap gone, upside potential increasing. So as far as I'm concerned, I see nothing to worry about, at least for now. Then I'm going to touch on VIX. I don't know if you guys noticed, but I moved the color of the screen to white, so it's easier for you to see. So VIX, I've mentioned for since May that I was expecting VIX to remain in this box that I drew at the time for several months, and we are now in beginning of July, and VIX is still stuck in this box. And you know my position regarding when to look for continuation of volatility. You need the setup I've always mentioned. You need the trade above trend. So trade is the black line above the red that would become green. That would be the first clue to expect a correction. Another clue could be that you get a trade of vola here, the black line here, getting to my max daily trade. We are very far from it. So again, I'm boggled by the fact that people are calling for a potential crash. It would come literally out of nowhere because nothing is signaling that we are expecting a crash to come in the coming days or even weeks. I think this move in VIX, this continuation in this box, doesn't mean that we don't get a retest somewhere in the north of 14, even 15. But the fact that VIX should remain in this box for another couple of months would not surprise me. Okay, so you can start to focus on buying puts, unloading your some of your long positions start once we see this kind of price action here. You know, you have price above trade and trend. That would be okay. I could consider, okay, we are near some event. It usually happens, you know, you can see here, same thing, you know. Then you can expect an event. But even when this happens, you usually have a couple of months before you can see that. So again, as far as I'm concerned, I don't see any risk in terms of vol. Now let's go to gold. So gold actually also no change since 3 weeks ago. I think it was our last talk. Sorry about that. It's because I'm renovating my subfloor. Anyway, volatility is still increasing. So volatility is a blue line. It's still increasing. No, for now, no, how to say, hint for vola of gold to start to go down. So as long as I see the blue line going higher, I have no interest to take this one as a long. What you want to see is blue line, so volatility to start to go down. You want to see the black line, so it's trade of volatility to at least start to point down. For now, it's just both are going higher, meaning volatility is going higher. And something new happened today also. You had GLD. Maybe it happened yesterday, but I didn't see. But GLD confirmed neutral. Oh, it's bearish now. Okay, it was neutral before. Now it's officially bearish. So, so it's quite concerning if you're long. You know, I see no confirmation now to take a long gold trade. So maybe in 2 weeks it's gonna change, but for now I'm not taking the bait. I'm not buying. One surprising move was CL. So 3 weeks ago we mentioned that you had on this day, was on the 4th of June, you had price that actually went to the lower range, the lower long-term range. So it was very good place to buy if you wanted to play a bounce. You then had on the 12th of June the cap to the downside, signifying that, okay, this bounce was getting more cemented. And now, surprisingly, because I was expecting this move to fail when retest of trend, CL is starting to, oil is starting to hold trend and actually confirming it. On the volatility side, what we are seeing also is volatility of oil is going down, and its trade is also starting to point down, which is very encouraging if you bought there. For now, despite macro, despite everything you are seeing, I mean, I don't see any reason to sell your position. It's very surprising and it's expected, but that's the way it is. So vola trade pointing down, and the trend confirmed on the MFR, and we are starting to rise. Now, what you want to see is the upside to start to expand. Okay. So you had the retest of the low of the range here, again here, held, pushing higher. Now you want to see the upside starting to go up. Nikkei, I have mentioned this one. I'm looking to buy this one. Maybe I should have bought instead of tweeting, but I'm starting to see very interesting stuff. So you have vola going down. You have trade of volatility also pointing down. It's very good. And now what you want to see is trade crossing trend to cement the move down on volatility. So I'm actually looking for the next dip. Okay, I didn't want to buy here because the upside was quite limited. I want to see a retest of Nikkei to trade or at least the low of the range. This is where I would consider to start a position on this one. You can see that this setup is usually very successful. So this is what happens here. Here you have the cross of trade and trend. You have the retest of trade and sometimes trend and the low of the range. And then you have the explosion with trade of volatility go down and maintaining volatility at the floor, which allows this asset to expand. So I'm looking to buy this one. And let's see if it happens or if I'm going to have to chase. Now let's go to DXY. Also very interesting one. So in the past few months, I mentioned that this one was very difficult to trade, at least to anticipate. It was just stuck at trend and doing nothing. And now it seems that something is happening. So you have VI momentum indicator is signaling that all the momentum in different time frames, we have done a video about that, are starting to move up. You have volatility of DXY going down. You have trade of volatility also going down, and you have the confirmation that we are back in the bull side for DXY. So this is something to monitor, especially if you monitor daily the correlation to different assets. So something to monitor, very important. VIX I've done, CL I've done, gold I've done. Okay, Bitcoin. So I took two positions. I think it was last week or the week before. I took two positions three positions in the buy the dip account. I bought some CAC and I bought some Bitcoin. And after getting stopped in Mara calls, I rebought them also. So why I bought Bitcoin? The first reason is, so you don't see with this color. I'm going to try to make it in another color. Sorry, it's because I changed the background. Let's go to gray. Yeah, let's go to pink or something. No, it's, sorry. I don't know, I changed this. Okay, anyway, there is a star here. It's written megabyte. Megabyte must be coded. Anyway, so I bought here. The average is 59,300. So should be in this area. So I bought Bitcoin here. So I will be very patient with this one because sometimes my megabyte is a bit early, but I know it's working. I know it will be a good average to hold. Now what I'm going to look for. I'm going to look for let's call it the space, the price difference between the lower range and the long-term low range to remain very tight. I don't want the long-term range to suddenly crash and expand. I want these two to stay very close to each other. I want to see a trade of volatility starting to point down. I want to see volatility start to go down. For now, it's early. You can see we are below trend, we are below trade. So it's a buy the dip setup. So it's not continuation. So let's see. The other one I bought was Mara, but Mara it's basically I bought because I was buying Bitcoin. So far it worked. Yesterday it was up like 14% something. And CAC, I did the same. I got the buy the dip trigger. But yeah, it's not in this script. It's on my the one I'm gonna update soon. So I got a buy here. So I bought here between 7,500. I bought some calls, September calls. 8,000 is the target. So I cut half. I think 7,715. I tweeted live when I got rid of half. And now I'm waiting. I'm gonna see. I'm considering adding, but I want to see vola to start to point down. And I want to see trade of volatility also starting to point down. Another two reasons that made me quite confident by buying this dip was cap on the range, even though they keep going down. It could be because the price is going down. So the cap. Another thing was momentum. Short-term momentum went at extreme, minus 2.40. And what made me not cut the position here was the fact that you also have mid-term momentum also below 2. And if you check the history of momentum, when you see these kinds of values, you get dips. So I'm going to choose the last one, this one, but you can check by yourself. It's the same. This is a buy the dip setup. So I'm quite confident about it. I think it's only related to the current elections in France. So I decided to buy this one. Let's see if it works. Anyway, it's buy the dip test. So I can hold for a few months. It doesn't matter. Then yields, and I'm going to conclude there. Let's go with the 2-year first. So the US 2-year volatility is still pointing higher. And something new happened on this one. You had a break of trend. And for now, it's, in my opinion, it's starting to confirm. So it's something to note. So the US 2-year is back to bearish. Volatility is rising. Trade of volatility is rising as well. The 10-year and the 30-year are a bit different. It was looking the same. And now for a few days, it's trying to break trend. You can see here. So this is MFR trend. It's trying to break trend, but we are at the top of the range. Here you can see volatility starting to go. It could be a epiphenomenon. So if trend is broken and we confirm, volatility should go back to above trade and continue to rise. So something you want to monitor. If you are long bonds, I will monitor here what is going to happen. I think we're going to go down. Here, we're going to reject and we're going to go down, and volatility will keep rising. I think bond holders will have some good time for the next weeks, maybe months. The 30-year is showing the same. I think it's an epiphenomenon. We are trying to break above trend. I think it's going to reject, especially when to top of the range. Now you want to see this one go back down and volatility go back up. So yeah, that's my current thought. I hope it will help. Right, I'm giving you the mic.
Nice. Thanks. Okay, from my side, now I have one position which is not day trading. So, I mean, I have one position that I plan to hold for a while. It's NVIDIA, and there is a reason for that. So let's first of all take a look at the chart of the most likely most important stock in the world for now. I have a call spread. August expiration. I bought it yesterday. I believe I tweeted about that. And the reason for that I bought because I think that we had a decent pullback to the mean, and I will explain what I call the mean soon. But basically, even if we go lower, I expect this stock to bounce from here. Actually, I don't expect a very fast and strong bounce. I don't expect it to go to new all-time highs like immediately, but I think that to the level of 130 or so, it's totally probable. What I have here on the chart is a moving monkey, just exponential moving average ATR band. So this is called the Keltner channel. I'm sure some of you are familiar with what it is. So basically, this orange line is the 21-day exponential moving average. I call it a mean, just a monthly mean. And usually, when we have nice trends, both up and down, there is some sort of rhythm. Because it's very hard for a price to remain extended far away from the mean. That's usually how the rhythm of the market goes. So whenever I see that the price is basically very far away from the mean, and far away usually it's basically 3 ATRs from the mean, then basically what it means is just another sign of that if you are not long, it's not a good place to buy. Even here, I mean, trends can stay overextended for a long periods of time, but it's not healthy. And now in this beautiful bullish trend where we saw higher highs, higher lows all the time, so I'm sure everyone will agree that this trend is very nice. We had this pullback to the mean, and basically yesterday I saw that the price is trying to reject the mean, and I bought this call spread. It's nothing too fancy. August expiration, 120, 130 vertical, and when I trade spreads and options, usually my rule is 50% stop loss, and I'm aiming for about 85% of the value if we get quickly. So for those who are trading options will understand, but I just wanted to show the overall state of the market. But of course, we see that when NVIDIA, for example, has pullbacks, it's quite common for it to go back to pre-ATRs below the mean. So, I mean, it can easily happen. It can easily fall to 110 or so. But even then, if that happens, the trend will still remain intact. So, but this is by no means the signal for entry of the trades. It's just a very quick way. So I think I hope it will be useful. It's a very quick way to see where the market is and how it's trending. Is it overextended or not? Because usually in trends, the best place to transact, if any, is somewhere around the mean. I mean, you don't want to buy when it's 3 ATRs from the mean, for example. So I also made a buy background. So now when it comes to timing and probable range, so of course MFR is what I use. So still, like I said, neutral area would only start if NVIDIA goes to like 110 or so. So we still have plenty of space. From upside downside ratio perspective, also, like I said, my first target is like 130, but based on ranges, we have plenty of upside. Even regular term ranges almost at all-time high. So I feel good about this, but as always, consistency for me is very important in trading. That's why I almost never buy stocks just outright. That's why I use options, and that's why this trade is quite slow unless we have a quite a big move. So I'm very confident about that. That basically even if we don't get a bounce now, most likely in upcoming couple of weeks we will get some bounce to 130 or so, and that's how I'm that's what I'm positioned for. So with this call spread, that's all it is. Now, as Rafael mentioned, yeah, upside downside ratios in major indices. And by major indices, I don't talk about IWM. That's not major for now. It's living its own life. But I mean, SPY, QQQ, we still have plenty of upside ranges wise. So if we go to SPY, uh, again, as Rafael said, I totally agree. Uh, Even if you don't buy here, which maybe is a good idea, but I mean, there is not a single reason in the world to be bearish right now. And I don't know, these people on Twitter who are bearish, maybe they are playing this lottery where, you know, if market falls, then they will be able to say, hey, you see, I was right. But the problem is that uh, these people who call for market crash every single year, usually they are right like 1 year out of 10. So it's not quite cool. So I wouldn't do that. I'm bullish. Uh, Whenever I see some good setups, I will buy maybe something else. But yeah, now I'm only looking for long setups. It's a bull market. It's a very clear bull market. We see bullish trends on all major stocks and ETFs, and that's the regime where I only look for long setups. I don't look. I don't try to search for tops or whatever. So I don't try to, you know, short the market at all-time highs just because what if? No, what if is not how I play the game, and probabilities are stacked against those people who try to fight the tape. So for now, I'm only looking for long setups. I have one trade. Uh, During the day, when day trading futures, of course, I go both ways, but I would never ever, in this regime, I would never hold a position, a bearish position overnight or whatever. So no, nothing changed. SPY is bullish. QQQ, I mean, you all know these charts. I mean, what are we talking about? IWM is not good, but it's nothing new about that. I mean, this chart is, I don't know, whatever that
It's
is.
a mess.
Yeah, it's a mess. You know, some people will say it's a range. Yeah, but I want momentum and I want trend following setup. So there is no trend to follow. So again, good old bonds, same thing. I mean, we had this range relatively flat. Rafael, I believe you said that you expected to bounce. What I think also is that I don't know regarding bounce, but it's quite far away from the mean, so I would expect it to stop falling for a while or going to the mean because, like I said, price always tends to find its mean, and yeah, so now I would expect it to go, but I would not buy it. No way. But yeah. We can easily go back to what 93, 92.50 at least, or even way higher. So yeah. If someone is shorting, I would first of all, if someone is short, a nice trade, but I would get rid of it. I think that now also from this perspective is not a good idea. And again, it's very simple setup. On any charting platform, you can set a 3 Keltner channels with 21 EMA and just 1 ATR bands, 2 ATR bands, and 3 ATR bands. It helps a lot for me to quickly figure it out where we are at. And of course, it's not something I came up with. A lot of people talk about that. Some people use Bollinger Bands, some people use Keltners or whatever just to figure out stuff. I find Keltner channels a very, very quick way. Just if I want to study something, it just tells me whether this instrument is worth doing homework or not. So, for example, if I want to have a TLT bearish signal from something, I would quickly look into this and I would say, no, it's overextended. I don't want to short. But yeah, basically follow the process. Don't fight the tape. This is a very important rule, and this rule saved me a lot of times over the years. And I mean, if asset is going up, look for a place to join the trend. Don't look for a place to try to go against it, because it doesn't work. Yeah, so I don't know. I'm flat except from NVIDIA call spread. I don't have any positions. Apart from that, the weight of that spread is 5%. For those who trade options, you will understand that in an options trading portfolios, usually you keep at least 15%, 50% in cash, but now I'm 95% in cash, and that spread hard stop is at 50% of the spread value, but I don't expect it to happen. We will see what goes. Yeah, so that's it from here. Again, I'm bullish. I want to just encourage everyone to not go along blindly, but I want to encourage everyone to stop fighting the tape. And if market is going up, you just buy the dip until it doesn't work. And that's why you have risk management process. That's why you have trends and stop losses, and you need to enter. I'm always ranting about the cheap trade or about the spots where your idea is invalidated. So always have that. But now my advice is, if it's a bullish trend, look for pullbacks with a goal to find a nice spot to enter a long position. Don't search for places to short. Yeah, so that was quick, but basically, at least from my perspective, I don't see any single reason to overthink that, and just enjoy the ride. And in order for you to enjoy the ride, you of course need to take care of risk. What do you think, Raphael, about that?
Yeah, I agree. Make your life less miserable. Don't be like the bears. Oh my God.
Of course.
Terrible.
Of course. Yeah, it's a so-called from trading psychology thing. It's so-called supermarket mentality, which actually makes sense in life in a lot of different aspects of life. Where people are always looking for bargains. So, if in supermarket something you need is on sale, you buy more of it, and it makes sense because, it's logic. But this supermarket mentality will never, ever work in financial markets. Will never, ever work in financial markets. What's normal in life will not make you money in financial markets. So it's basically that. If people still tend to buy stocks that are dropping. I saw, for example, a lot of tweets on Twitter that, for example, people want to buy Nike, or people are buying Nike, or so on. Actually, let's take a look into that chart. And I'll show an example of a supermarket mentality, because Nike, it's a big company, but now people are looking at this gap, and guess what? interesting gap, but people are forgetting that Nike is gapping down basically after every earning. It's nothing new. The stock is going down not since 3 days ago. It's going down since whatever that is. I mean, and people are still buying. People see articles and maybe watching CNBC or reading articles and oh, dropped, great company dropped, I will buy. No, there is no single reason to buy a stock when it's going down after every earnings. And I mean, people say, oh, it's cheap. Some people like it because of PE. Some people like it because, you know, it's Nike or whatever. And it will not change. But if you want to have a chance to make money consistently in financial markets, don't buy things like that. You will be better off buying things like Nvidia. And people, you know, psychologically, it's very hard. And I was fighting with that all the time. Psychologically, it's very hard to buy something at all-time highs. Because then people think, oh my God, I mean, it's all-time highs, it's very expensive. But guess what? How this industry works. Some financial managers are underweight with stock. They are always receiving questions from investment committees, from their clients, from whatever. Why? When something is making an all-time highs, people will, new money will come into it, until of course trend changes. But after all-time highs comes new all-time high and new all-time high and new all-time high. And what you want to do is when you see strong trends, you want to join that. So buy the dip. And on stocks like Nike, for example, even if someone wanted to trade that, you should every bounce up with a short signal, not a buy signal. And I'm just talking about Nike, not because of a Nike, just because it's a great example of something that stop buying bargains. It's not a bargain. The stock can come back, but the stock can go to $50 to $20. We saw that in financial markets. We see that all the time. Great companies go and fall 80%, and then people buy, and then it falls another 80% from that price. So in financial markets, don't try to search for bargains. If your goal is to manage active portfolio, don't hold bags and don't try to catch falling knives. Yeah, so that was the psychology rant, because I mean,
Yeah, I checked Nike to see on my buy and sell. It's not oversold.
no,
I don't have any buy signal triggering. And yeah, regarding supermarket mentality, I mean, at least if you want to try, use my buy the dip script.
yeah,
I mean, I have a portfolio dedicated to that, you know, just I'm buying anything that is triggering like buy me. So you
yeah.
can try.
And
It's free
for
available.
example, yeah, like you said, in momentum score, yeah, no surprise that it's oversold on 10 days because it's a very short term. But what should be a signal for, like you said, but it's not oversold. But even after this massive drop, I mean, 30-day and 90-day Momo is not oversold at all. And when was the last time, for example, when long term, so 90-day Momo was above zero at least? I'm not talking about +2 or so, but when was the last time when the red line in my script, which is 90 days, was above zero? I mean, it was in February. So what
Yeah,
are we talking about?
yeah.
Yes. So I don't know. Now, you know, this conversation is now about Nike, but I want our listeners to understand that it's not about Nike at all. It's in general. If something is falling, it can be a great company. We had a lot of great companies that, by great, I mean hundreds of billions of market cap, and even companies that were in Dow indexes. I mean, we are talking like GEs and so on. You know, in decades of history, there were companies that went from $500 to $10, and you know, these companies then from $500 they went to $300. So people were buying. And when these companies went from $300 to $100, and guess what? All the people were buying because it can't go any lower, right? Yeah, and then from $100 it went to $10 or even zero. We had these examples throughout history. So be a student of history. And if you are an active investor or a trader like me, or active investor, so it means you are not like buying and holding for 50 years, and you are diversifying and you don't care, because if you are that type of investor, you are not watching our shows and you are not using our tools anyway. So if you are watching and using, you are a trader, not necessarily a day trader, but active person who is actively managing your portfolio. So what is the one rule of active management? I mean, don't hold positions that are going against you, and don't buy and don't fight the tape. I mean, don't buy something that is falling like a stone. Yeah, so that was that. And why I'm talking about that? Because yeah, like I said, bullish trends, QQQ, SPY, major companies. Okay, now because uh, Apple, okay, is it bearish chart? I mean, I'm not a very advanced technical analysis expert or whatever, but it's not a bearish chart. I mean, you can ask anyone. It's not a bearish chart. Meta, whatever that is. Uh, yeah, again, it's definitely not a bearish chart. And you go through these biggest companies, apart from Tesla. Tesla now is also going crazy, but it was quite choppy. So you know, this chart looks a little bit different. But even then, I mean, all these companies, you know, the weightings of these companies in S&P and especially Nasdaq, and again another company, good old Bezos. Yeah, I mean, is it a bearish chart? Because trading should be simple, and by simple I mean simple but not stupid. Yeah, so it means you don't buy at some random places just because, but when you see a chart like this, you should buy the dip. And if when you buy a dip, if it's not a dip, you will have a stop loss. That's the only advice I want to give, and I will repeat it over and over. And when the trend will turn to bearish, I will say the same things about shorting the market. But that's it. You see this, instead of trying to predict the top and shorting the market, wait for pullbacks. And I mean, yeah, simple but not stupid. And like I said, making money in financial markets is not easy, but it's definitely not as hard as Wall Street or some others want you to believe. I mean, don't fight the tape. Yeah. Uh, I hope it was helpful. Okay, I'm stopping the screen sharing. Yes.
Yeah, and don't worry regarding the before we get the vola spike. I'm telling you the VIX setup I always mention is gonna say it's about to happen. You're gonna see it. So don't worry about it. When there is a high risk of vola explosion, there will be clues. Okay, so that's why the title of this video is really to make fun of these people who are perma bears. And I don't understand, you know, I mean, you push content that is usable, that makes you autonomous in your trading, but you get like 10 likes, 15 likes, and these guys, every week, market is about to crash. They just draw something and there's a big arrow pointing to zero. It's like, oh my God, it's tomorrow. And they basically do this, I mean, every 2 weeks, every 3 weeks, and they still get like thousands of likes. And don't be that guy. Don't be that guy. So
yeah, I noticed, and especially, for example, on Friday when we had this like 150 point down move in Nasdaq. I mean, Usually, all it takes is like less than 1% red day in futures, and all the bears on Twitter are celebrating.
One caveat though is VIX is getting near the low of the range. I mean, I think we are like 0.6 from the low of the range. So,
Yeah.
okay, so let's be fair. We could have some VIX action, you know, probably end of the week, beginning of next week. But that's it. Don't be afraid when it happens. Look at
Yeah, but I mean, remember that tomorrow we have early close, and the day after tomorrow we have a bank holiday. And by the way,
Okay.
happy 4th of July for all our viewers from that side of the pond. So, yeah,
Yes. Okay.
congratulations on that. Yeah,
Okay,
but
man.
like you said, it's a very good point. But first of all, anything can happen. That's why you have risk management in place. And like I said, I'm sure that our viewers are people who are in the markets actively. So it doesn't matter whether you are a day trader or swing trader or macro active portfolio manager. Everyone must have some sort of protection, and by protection, I'm not necessarily mean buying puts or big calls or whatever. I just mean that some stop loss or so. So that was the main point. That even if we get a correction, which I mean, corrections happen all the time, and most corrections doesn't mean that trend changed. But yeah, I mean, your job as an active trader is to manage risk. Uh, one of my mentors in the early days told me very good advice that what is your job? What is the job of a trader? Job of a trader is not to be right. Job of a trader is to take more money from the market than you compared to what you give back to the market, and that's the only point. I mean, if you're you have a position, if it's going up in your favor, yeah, sit tight. But I mean, if it's going against you, don't hold it. Don't hope. Don't have an very actionable plan. I mean, because so what? Let's say you are long. Next day there is a red day. You will close. Guess what? If market falls, you will be happy. You will be very happy you did that. And if market doesn't fall, I mean, you will re-enter. What's the problem? No problem. So the only thing that you need to do is manage your risk and go with a trend, not against it.
Yeah, I want to show again, you know, the setup for this. I went back to what happened in 2020 when we had the sell-off, and the same setup was there. You know, price above trade and trend, trade cross trend, retest of trade. So we are in the 14. And here is where you buy, by the way. This is where you buy puts, and every time you're gonna get a ramp. It can be a big ramp, can be a small ramp, but if you took the trade, I mean, we are going to fucking 80, you know. So stop trying to short like randomly because some guy say he bought puts, you know, and he's calling for it's coming, TikTok, you know. Just look if you have access to my BVB, to my trade and trend volatility on MFR trading view page. This is the setup you are looking for. If some rando on Twitter is calling for a crash, okay, just go to VIX. Okay, are we there? No. So this guy is full of shit. That's it. Okay, so
Yes.
we're gonna get the next ramp in VIX, and it's not today. Okay, guys. So I think we are good. Especially
Yeah,
a lot of people are already in holidays because there is the 4th of July. Indeed, I totally forgot. Especially we have the French also celebration in 12 days because we are very close to the American.
yeah.
That I forgot. So yeah, maybe that's why again
Yeah, so yeah, happy celebration. Be careful, as the joke says. That somewhere in the US now there is a man who has no idea that these are the last days when he has 10 fingers. So be careful, yeah, be careful, everyone, and manage risk. We will come back hopefully in 2 weeks. And yeah, whatever happens, the most important thing is don't try to be a hero and don't fight the tape.
Yes.
Uh,
In
yeah, trade
conclusion,
for the
Vai,
tomorrow. Yeah.
in conclusion, Vai, I also want to congratulate Raghav for his Tesla trade
Oh yes,
because I
great
know
trade.
he mentioned you because he was using the Momo Vai script. Very great trade. Okay, take care, guys. Have a good
Take care,
day.
guys. Trade for the tomorrow. If you lose all your money tomorrow, you will not be able to trade. So trade for the tomorrow. Bye.
Bye.